I'm Taylor Riggs in for Emily Chang, and this is the best of Bloomberg Technology, where we bring you all of our top interviews from this week in tech. Coming up, the threat you can't see. The U.S. and Iran trade military attacks. Even if strikes wane, cyber risks remain. We'll discuss what might come next. Plus hardware, mobility, content, and digital assistance. We've got highlights from the annual CES event in Las Vegas. We hear from the heads of Micron, Qualcomm, Verizon Media, and Quibi. And Electric Avenue, Tesla CEO Elon Musk cuts a rug as the company delivers its first customer cars from the Shanghai factory. Shares touch record highs. But first, to our top story, and this week brought increased escalation of tensions between the U.S. and Iran. Last Friday, a U.S. military strike at Baghdad International Airport took out one of Iran's top generals. Tehran responded by launching missiles at U.S. interests in Iraq. It all roiled the markets and created new fears of cyber warfare. In fact, shares of cybersecurity firms like Cloudflare and CrowdStrike were up this week as a result. For more, I was joined on Wednesday by Marcus Fowler, Director of Strategic Threat at AI security firm Darktrace, and our cybersecurity reporter, Kartikeya Mehrotra.
I think there's a significant distinction between Iran's conventional battlefield capabilities and where they are on the cyber front. They're never going to go toe-to-toe with the United States, or at least in this realm, in a conventional battle. In the cyber realm, they have a greater chance of pushing back more dramatically and having greater impact in the United States. So even though they haven't gone that route in terms of immediate reprisal, it's certainly not out of the question that in the days, months, weeks to come, we'll see something else from Iran.
And Marcus, your take on this, moving now from a physical attack to still waiting on a potential cyber attack?
Sure. Thank you, Taylor. Yeah, I think, Kartikeya, you make great points. Them moving into the cyberspace, this is the time for them to do it even more than they already have, which they have historically up to this point of the most recent attacks and then beyond. So certainly I wasn't expecting to see it as the immediate retribution. I think we saw that last night in the initial term, but those cyber attacks and the vulnerabilities that the U.S. had are significant. And when we think about those vulnerabilities, it expands not only the government, but the large amount of threat landscape associated with the private industry and commercial companies.
And Marcus, I wonder why a physical attack first and then a cyber attack. Why is cyber attack seen as a secondary choice?
So I would have said a secondary or augmenting or kind of happening together. I really feel like in order to get revenge, the adequate revenge, it needed to be something in the physical space that they could point to, that the Iranians could point to as on par to, what occurred. However, cyber, unless they were going to go after critical infrastructure as their first move, which I think would have been very bold and very escalatory, cyber moving forward beyond the physical allows them to still do it behind the scenes, that both would include something they could attribute, say that they did conduct, or allow it to be conducted, absent their actually putting their name to it.
Kartikeya, in the introduction, we were talking about FireEye and CrowdStrike released just a few examples of some of the companies that could benefit from this. In your reporting, is it too early to tell some of the early winners and losers?
Yeah, it's really hard to say because you have CrowdStrike and FireEye as the two prominent strictly cyber firms that are listed, but there are dozens of large and small companies that play in this space. Microsoft offers cybersecurity solutions and on-site services when there's a hack. Cisco does as well. There are local providers in states that are providing state governments and counties with cybersecurity protection. So I think you can distinctly state that CrowdStrike and FireEye will reap some of the benefits, but what share of it is kind of hard to tell right now.
Marcus, I'm curious to know, now that we've been talking about this for a few days, if that means that we are any more prepared?
So I don't think the answer is yes. I think we're much more on guard. I don't think prepared, either we're prepared before or we're trying to prepare now. And as you talk about the cybersecurity companies and what they're looking at and what they may be thinking about in terms of being positioning, I think one area we're seeing a growth in this industry and more focus is the application of artificial intelligence to move faster into that security space more quickly. So maybe you can get more prepared faster, right? Because we have a scarcity of cybersecurity skill sets. There's a number of individuals that are trying to, figure out the right formula for both bringing in new technologies like artificial intelligence while getting a more robust security team in place.
Marcus, some of your smart analysis has pointed to an increase in national infrastructure and cyber physical attacks. Walk me through both of those.
Sure. I mean, I think the place there's a lot of vulnerability in the U.S. And in fact, if they were going to strike inside the U.S., I didn't think it would be physical. I thought it might be against critical infrastructure. I think maybe today we've moved past that level of escalation, but it remains a vulnerability in something that we have to be very mindful of. And I know that the U.S. government is obviously very focused on it, but you have these systems, right, these critical infrastructure in which you have these operational, these more legacy historical systems now being more linked into with the IT, and that makes that vulnerability increase. I think on the cyber physical front, you're talking about moving away from going after data, grabbing data, and more at causing machines to destroy themselves through a cyber attack, which is significant if we move further into that space and becomes mainstream as a viable escalation point.
And Kartikeya, I feel like I come to you every few days or so and ask how good are the Iranian coders and how much better are we at defending ourselves? How far do we know? How far, I guess, in preparation, I'm trying to see, do we know that they are getting ahead of us?
It's hard to say on a day-to-day basis how they're progressing, but since Stuxnet hit more than 10 years ago, we've seen Iran's cyber capabilities mature progressively. In 2012, their Shamoon attack on Saudi Aramco was seen as their introduction to the global landscape, and nobody thought they would use that tech again. But then 4 years later, they were able to tweak it and attack a broader swath of Saudi assets once again. We've seen smaller attacks, but that are more incrementally sophisticated in their technology and the ways that they're using it to indicate that their program is getting stronger. The trouble is that understanding exactly what they're capable of only really occurs when they successfully infiltrate an adversary. And so I guess we'll really know what they're capable of when we see what they're capable of.
That was Marcus Fowler of Darktrace and Bloomberg's Kartikeya Mehrotra. And coming up, CES 2020 kicked off in Las Vegas this week, and we talked to the biggest leaders in tech and media. Next, we'll hear from the CEO of Micron as chip makers have enjoyed a recent rally. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Chip-related stocks have enjoyed a recent rally against the broader market amid growing optimism for the sector as 2020 takes hold. That optimism was apparent at CES in Las Vegas. I caught up with Micron CEO Sanjay Mehrotra Tuesday.
So with respect to the chip, DRAM as well as flash, we have said that 2020 should be a good year for the industry. First quarter of calendar 2020 is typically seasonally slower quarter in terms of demand, but in our industry, because of the capex reductions, the supply growth has been slower than the demand growth. Is the end market applications such as 5G, AI, IoT, all of these are driving explosion in data, and Micron products are used to store that data and to process that data. So applications are growing. Micron is expanding its portfolio of solutions. We are well positioned to address the opportunities in 2020. We are excitedly looking forward to 2020. 2019, there was some excess supply in the industry, yet Micron produced excellent results in terms of overall financial performance. We are looking forward to 2020 here with strong demand drivers as well as strong execution on the part of Micron with respect to its technology and product portfolio.
And Sanjay, a few analysts on the street, namely some from Cowen, upgrading the stock, saying that NAND should become profitable as new smartphone launches help to tighten that supply up. Does that also coincide with your thinking as you look to tighter supply in 2020?
Yes, I think as we said, that the supply growth is less than demand growth, and the demand, it continues to increase given the end market applications such as cloud, such as smartphones, autonomous vehicles, increasingly driver autonomous features in the driver assisted vehicles as well. All of these are driving growth in demand. Just look at 5G smartphones. They are actually driving higher average capacity of DRAM than 4G phones. There have been phones announced with DRAM content as high as 12 gigabyte in them. Even $300 kind of 5G phones have 6 gigabyte of DRAM in them, whereas in 4G phones, average was somewhere between 3 to 4 gigabyte. And in 2020, a couple of 100 million of 5G smartphones are expected to be sold. So 5G is going to be a strong driver of DRAM content growth as well as flash content growth, given the fast speed and connectivity that it provides, and explosion of data and AI-driven features, as well as really immersive experiences that 5G phones will be able to provide to you. They drive greater demand for data, which bodes well for Micron's business. In fact, we have exciting products that we, over the year, have in 2019 announced that really suit very well for the smartphone applications. But let me tell you, it's not just about smartphone. When you look at cloud and servers, they are requiring, AI-driven applications are requiring more and more memory storage in cloud and server and data center applications as well.
That was Micron CEO Sanjay Mehrotra. As for chipmaker Qualcomm, it unveiled the first chips and software for fully autonomous vehicles at CES on Monday. Qualcomm president Cristiano Amon spoke with Bloomberg about what he calls the company's natural extension into the space.
We're very excited, I think, to expand, our automotive offering, getting into autonomous. And the reason I answer your question is, we believe that the cars are going to have to process so much data, and it requires so much processing capabilities. Pretty much, it is going to require a completely different equation about power. And coming from the cell phone industry, we actually have the ability to do chips. They're very efficient from a power standpoint. You cannot run a data center out of the trunk of your car. And I think that's where the real opportunity is for Qualcomm. We unveiled today our solutions from both all the way to level 1 to level 4+, which is autonomy. But more important, we believe the real commercial opportunity will be to add autonomy to every car as a convenient feature with the driver behind the wheel, much like you have cruise control. And I think that's the real opportunity that Qualcomm has to scale this. And we're also pleased to announce the expansion of our relationship with General Motors now to include autonomy as well. So very happy about that. It's a significant milestone for the Qualcomm automotive business here at CES.
So when we talk about, Cristiano, sort of the prospects here and the competition in this space, I mean, a couple of months ago, I think back in November, Intel talked about its acquisition of Mobileye and how it was allowing it to sort of scale up at a pace that it said was faster than some of its competitors. Is the race here, is this going to be about what you do in Qualcomm internally, or do you start looking at M&A and potentially buying some of the smaller players out there?
Look, that's a great question. We've been building in our automotive business organically. And I think we got to naturally to connectivity to become the #1 in both telematics and connecting the car to the other cars with Cellular V2X. Then we went to the digital cockpit transformation, and we became now #1 with 19 OEMs engaged. And I think we look at autonomy as just a natural extension of our computing, capabilities becoming more powerful for battery-powered devices. That's what you see in phones, and we got into PCs. Naturally, that will be for the car as well. And, we could see further acquisitions down the road, but probably smaller. We feel pretty good about what we've done so far to be able to build an ADAS platform with organic efforts.
okay, obviously there's going to be a lot of flashy things shown at CES that would make you think that all of this is available tomorrow. When it comes to fully autonomous vehicles, though, we're not there yet. When is Qualcomm betting that we will actually get fully autonomous vehicles? Is this a 2021, 2022, 2030 event?
Yeah, I think that's what the difference is. Why we have a platform that we can do full autonomy, we're really focused on what we call level 2+ and level 3, which allow you to actually get scale and make this really a commercial good proposition for us and for automakers. And the platform we unveiled today, we expect to see cars in the road by 2023 with what we call level 2+ or level 3, which allow you to have the full capabilities of an autonomous driving, but with the driver behind the wheel, more like a convenient feature. That's where we think the scale is going to be, and we're going to see that becoming a commercial reality.
That was Qualcomm President Cristiano Amon. And coming up, the food delivery business is getting crowded, and Grubhub may be looking to consolidate. We'll discuss next. And later, Tesla CEO Elon Musk has reasons to celebrate as Tesla's production and delivery efforts in China get moving. This is Bloomberg. It's no news that Microsoft competes with Amazon in the cloud business, but a new target seems to be in retail customers. For details, I caught up with Bloomberg's Dina Bass and Mizuho analyst Greg Moskowitz.
We're talking about this, first of all, because Microsoft CEO Satya Nadella is keynoting a big retail show on Sunday. And the reason for this is retail is just one of their most important sectors. Generally speaking, Amazon Web Services dominates the market, but none of those retailers want to work with Amazon, which is one of their biggest competitors in Amazon's consumer business. They don't want to line Amazon's pockets with cloud revenue. So Microsoft has been working with a lot of these customers, from Kroger to Walgreens to now IKEA, on a bunch of different things like store of the future kind of concepts, ways to help these companies' e-commerce sites better monetize, sell more advertising, things that will help these retailers do a better job of competing with Amazon's consumer business. And at the same token, these relationships help Microsoft's cloud business compete better with Amazon's cloud business.
Greg, as you take a look at Microsoft in your coverage, where do you see them being able to expand some of their cloud offerings to really go more toe-to-toe with Amazon?
Sure, and I would say maybe first of all, just to take a step back, Amazon has built a terrific service. It's going to get a lot larger over time. However, we have fairly consistently seen Microsoft narrow the gap in terms of size vis-a-vis AWS, and we expect that's going to continue. They're doing a better job disproportionately getting more enterprise business. They recently won a $10 billion contract with the DoD over a 10-year period that we think is going to open a lot of doors for them. And then, as Dina mentioned, you have the retail aspect, and I would say it really was last year in 2019 when we first began to hear about Microsoft pitching to customers that they are the more logical presence or cloud provider as it relates to those retail companies, where again they're not sort of in the crosshair, so to speak, as that might be the case with AWS. So those would be again areas where we're seeing Microsoft gain momentum.
That was Bloomberg's Dina Bass and Mizuho analyst Greg Moskowitz. Now, the food delivery service is a crowded one, and there were reports this week that Grubhub may be looking for a sale or an acquisition. Analysts at Gordon Haskett say the company is more likely to be an M&A target than a buyer. For more on the space and what we can expect in terms of consolidation, I spoke Thursday to D.A. Davidson's Tom White and Jefferies analyst Brent Thill.
You've seen, consolidation of the space with DoorDash buying Caviar. You're seeing, other smaller regional players get rolled up by others in the industry. So I think it could go either way. Clearly, there's been a lot of pressure on the revenue and the margin as both Uber and DoorDash have come in and put a lot of focus on this market. So, our short-term thesis is that Grub is dislocated from this, given they had really great growth and great margins. But long-term, I think that the economics can be restored. I think the CEO of Grubhub has said that consumers should not get used to the prices that they're seeing right now because they're not sustainable. And so I think like in any market, you see too many vendors chase the market, and you're seeing that now. There's just way too much competition that will consolidate and potentially economics restore. So I think you could see, there's a standalone case for Grub where they could actually do very well among, 3 big players, which we think they would be the third biggest. And there's another case where you could see, would Amazon want to acquire this? Could Uber or DoorDash look at a way to consolidate some of the assets together? Could another large food company or beverage company look at this? I think there are a lot of options where shareholders could win at this level. We don't have a buy in the stock, but do believe that you could see a higher price.
Well, Brent, you mentioned Uber Eats. So, Tom, let me come and pose this question to you. As you've been covering Uber and Uber Eats, do you see potential for Uber Eats to come in here and take up Grub?
Yeah, I think I do. I mean, echoing the comments of my colleague here, I think this is a space that is ripe for consolidation. You've got a lot of businesses that have very similar, if not identical, business models. They're burning cash, chasing growth. And so on paper, consolidation just seems to make a lot of sense here. I do think for Uber, it makes a ton of strategic sense to potentially explore this. I think there's reasonable questions as to whether or not they could get a deal done. I think Uber's got a bit of a target on their back, if you will, in the eyes of regulators kind of broadly. So that's an open question. I mean, ultimately, with these sorts of deals, when antitrust folks look at it, it kind of depends on how they define the market. Are they going to define it narrowly as just online food delivery? Or are they going to sort of look more broadly at food delivery in general, including offline, or just sort of restaurant volume overall? I think so. There's some questions there, but also to Brett's point, I think one thing that also could go against this deal or a deal happening a little bit is just that it will likely result in prices for consumers going up, and that's not something that regulators generally like to see when they're going to approve some sort of large-scale merger. I mean, I think it's inevitable eventually that that's going to happen, but a deal would probably accelerate that timeline.
That was Tom White of D.A. Davidson and Jefferies analyst Brent Thill. Alphabet was upgraded to a buy from hold at Pivotal Research. Analyst Michael Levine wrote that after a critical foundation year in 2019, the narrative continues to improve in 2020 and beyond. For more discussion, I spoke to him Monday.
I think one of the things that was most compelling to us, Taylor, was both the change in regime with Sundar basically stepping in as CEO and chairman, but something that I think a lot of investors may have missed, his compensation agreement was filed with the SEC on December 20th, and what struck us most compellingly was he basically is compensated on the percentage differential that Google stock does relative to the S&P 100. And he's basically got a $45 million tranche on plan for stock performance in 2021, a second $45 million for 20 through 22. So it's pretty refreshing and encouraging to see alignment between management and stock performance from a company that has just historically taken a very different approach to working with the street.
That was Michael Levine of Pivotal Research. And coming up, Apple keeps hitting records and reaches a new milestone in China. We'll have the details next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Taylor Riggs. Apple enjoyed a fresh price target boost from Jefferies this week from $285 to $350 a share. Looking at the past year, shares continue to reach higher and this week hit an intraday record. Analyst Kyle McNeely says look at foot traffic at U.S. Apple stores as well as global web traffic showed that Apple is set for a strong finish to 2019 when it reports earnings. Sales in China also up as government data indicates it grew 18% year over year. Bloomberg's Alistair Barr filled me in Thursday.
Certainly in China, that number is a surprise. So that there's a broad push in China to focus on Huawei and have consumers buy Huawei phones instead of iPhones, and that was a concern for a lot of last year. Some of the trade tension has come down in recent months, so maybe that has something to do with it. But I think more to the point is that a device like the iPhone 11 is a little bit cheaper. The battery life is very, very long, and the photos that you can take are a lot better than the previous version. So that when you put all those things together and then you combine it with really a large backlog of older iPhones like the iPhone 6 and the iPhone 6s, which were really, really huge hits, those devices are 3, 4, 5 years old even. So there comes a point where just millions and millions of people are going to upgrade. Are they going to upgrade to something else? Probably not. They're going to upgrade to a new iPhone.
And I think one of the other things that surprised us was the fact that the iPhone 5G phones aren't out yet. What then was sort of driving the big push that we saw in December?
Yeah, I think partly it is this upgrade wave. So even let's say even if they didn't produce the iPhone 11 and just had the same new phone from last year, if you have an iPhone 6s which is 4 years old and the battery is running down, you really have to upgrade at some point. And I think, jumping to an Android phone nowadays is becoming a bigger and bigger step for people because a lot of your digital life is run through these devices now, and there are other ways that Apple hooks people into the ecosystem. So really giving that up and going somewhere else is really a huge step, and people aren't willing to do that.
I want to touch on a company that you mentioned earlier, which is Huawei. Frankly, I'm a little bit surprised that we haven't seen more nationalism in China about Huawei and then pushing away Apple.
Yeah, I think that's very true. I think part of it is this ecosystem issue. So if you already have a Huawei phone, you're used to the Android operating system, and you probably will stick to that. So I think Apple now, the challenge really is kind of a lot lower than 2 years ago. Even 2 years ago, investors were expecting the company to keep growing iPhone sales and unit sales, and then after that real shock last year, that really reset the bar. And now if Apple gets like 5% growth a year in iPhone unit sales going off into the next few years, investors will be completely over the moon because there are other things that are coming that will add to the growth.
That was Bloomberg's Alistair Barr. Tesla CEO Elon Musk was in China this week and had something to celebrate. Musk was at a Tesla plant outside Shanghai Tuesday. The company handed over the first China-made Model 3 sedans to the public, but it's a different model EV that has Musk excited about.
Actually, probably even more people prefer an SUV than a sedan, and I think ultimately Model Y will have more demand than probably all of the other cars of Tesla combined.
For more, I spoke with Bloomberg's Dana Hull, who covers Tesla.
Tesla is the only car maker that has a plant in China without a JV, so that sets it apart from others. It's a wholly owned Tesla facility. They got a lot of financing from Chinese banks, and the speed of the construction, I think, really astounded people. A year ago, this was just kind of like a muddy field, and now they're having this big party. A lot of Chinese government officials were there. Musk was dancing, and they're, sort of celebrating the handover of the first cars.
I want to come and take a look at a chart here that I'm showing inside my terminal because China is, as we know, the largest market for EVs. They have some of the most demand. And this really has been the bull and the bear thesis on the stock, is can they actually capture that Chinese market? Is this the first step and really what could set Tesla apart?
Yeah, in the middle of this trade war, having local production helps to lower the cost. And right now, Tesla is assembling the cars in China. As more and more of the supply chain is localized, full-on production will happen, and then they will be able to lower the cost for consumers even more. So right now, Tesla cars are still kind of high compared to locally made cars like BYD, but they'll be able to lower the price, and then that will give them, they'll be at more cost parity.
And then in the soundbite that we heard in the beginning, he was talking about how the Model Y demand, he thinks, will really eclipse all of the other models combined. When do we expect then the Model Y crossover?
Yeah, so he said that before. He said that on Tesla's last earnings call. I think what was news to me is that they're going to begin Model Y production in Shanghai as well, and they haven't begun Model Y production here in Fremont yet. So it sounds like they're going to be sort of launch the Model Y in parallel on two continents, and the Y is the lower cost SUV. Tesla had a lot of challenges launching the Model X. I think they've learned a lot of lessons from that, and the Y probably will be big. I mean, most people in the world now want SUVs as opposed to sedans.
The biggest issue, as we remember, was the production hell that he described over here in California. How did they avoid that in China? This appeared to be a seamless rollout.
It's hard to say. We haven't heard much from the company about what they did, but I think that Tesla sort of has reinvented the wheel many times, and they learn painfully often the challenges of manufacturing, and then they kind of power their way through them. And I think that whatever they learned from getting the Model 3 up and running in Fremont, they took with them to China and then improved on it further.
I'm asking a little bit of a far-out question here, but we were speaking with the Micron CEO at the top of the hour. We remember Micron had gone into China, and then they accused the Chinese of stealing their technology and pushing them out. Is there a risk that Tesla goes into China, China then figures out their technology and kicks Tesla out?
I mean, I guess that's always a risk. I would be surprised if Tesla went into China not being aware of those risks. And I think that the IP that they have is pretty solid, but they've also open sourced a lot of their patents. And I think it would be very hard for someone to actually just copy them outright.
That was Bloomberg's Dana Hull. And coming up, we head back to CES in Las Vegas. Highlights from our conversation with Quibi CEO Meg Whitman and founder Jeffrey Katzenberg on their new venture in the crowded streaming space. And later, he's talked to some of the biggest media and tech moguls of this week at CES. We'll get insight from MediaLink founder and CEO Michael Kasson on the latest trends in streaming, ads, and brands. This is Bloomberg. Back to CES in Las Vegas, where we got an earful from content creators and brand advisors on technology and streaming. First up, Quibi CEO Meg Whitman and founder Jeffrey Katzenberg. We talked with the pair Wednesday on how mobile content can shape the future.
What we talked about today was a new technology platform, which is part of our differentiation versus the other streaming services, that will allow mobile viewing to be extraordinary and enable creators to tell stories in a whole new way for the mobile phone. And just a couple of other things. We think that people will be on Quibi during the day, 7 in the morning till 7 at night, on-the-go viewing, where they have a chance to watch very fantastic Hollywood quality content, but in those short bites. And we, as I said, we introduced a technology today that is full screen video, landscape to portrait, that allows you to see content in ways you've never seen before.
And of course, you've just closed a second round of funding as well, $400 million that'll carry you through the spring launch in April and beyond. Jeffrey, I want to get more on the details here, because 175 new original shows, 8,600 episodes of quick bite content. As Romain said, this is a crowded field. Who exactly are you targeting here with this content, and how do you convince them to pay another $4.99 on top of their Netflix subscription, their HBO Go, and their Disney Plus?
Our content is quite unique, very differentiated from anything that anybody is making today. As Meg said, we're relying on this incredible new technology. It is really quite revolutionary in terms of the quality of what we can deliver. And then, yes, there's a tremendous volume of content because people want quality, but they also want quantity. We will publish 3 hours of original content every single day on Quibi. That's 35% more than a broadcast network shows in prime time. We're not competing for the television set. All of the things that are going on today around OTT and streaming are all focused on what people are doing in front of their TV. Less than 10% of the viewing of Netflix, HBO, Disney Plus, any of them are actually on a telephone. And we are only on a telephone, and so we are highly differentiated, and our use case is quite different.
That was Quibi CEO Meg Whitman and founder Jeffrey Katzenberg. Also at CES, Verizon Media made the rounds discussing its partnership with the streaming service Disney Plus. Bloomberg's Ed Ludlow caught up with Verizon Media CEO Guru Gowrappan Wednesday.
If you think about our business on the Verizon Media, if you start thinking of us, again, think about the 900 million users globally. We're also the eyeballs on the top of the funnel for Disney Plus. So for our side of the business, there's a lot of ad spend that Disney is doing to attract new customers through our ecosystem. That's one. Two, part of our media platform, the streaming service, actually Disney Plus leverages that to stream their content today. So those two businesses actually feel as Disney Plus grows, as Verizon overall grows, we actually grow with that.
Who else could you go into partnership with in a similar way?
The reality is there are only limited set number of use cases that you can go. I mean, you want to be careful with consumers and you want to work with great iconic brands. Disney is a great brand like Verizon. That partnership works well. So I think we'll go use case by use case and see who there are. I don't want to name names, but I think there's going to be a limited set of partners who will benefit from this ecosystem. Apple Music did that in a version before with Verizon, and Disney is the next big thing that's happening, and I would see that continue as use cases grow.
And how do you read Disney's success? I mean, what do you see Disney Plus as achieving in the next 12 months, the next 3 years?
I think at the top level, getting more customers signing up. Two is retention of customers really coming in. And are you keeping them for longer term?
Your boss, Hans Vestberg, is very focused, laser focused on 5G. The company more broadly is focused on 5G. What opportunity does 5G bring Verizon Media?
One of the biggest use cases when you think about 5G is the media use case is what leverages. Actually, that's the most tangible for consumers and advertisers. We've seen AR in the previous world, in the 4G world, or call it today's world, is very non-mainstream. I think in the 5G world, AR becomes mainstream. Think about XR platform. We launched an XR news platform in collaboration with AP, now this Reuters, which is really building a platform where news becomes experiential. The reason you can't do that at scale today, because you don't have the bandwidth, the latency, the speed that you need to be able to do that. 5G at scale helps us do that. So I think for our business, the AR, let that be on the content experience side, or on the advertiser side, the AR ad units now go from 0.001% of the total impression base to a much bigger scale. Sports is another use case. We've been working with NFL, NBA to really get to where fan base and fandom in terms of interactivity goes to the next level.
Let's jump in there. I want to talk about sports.
Sure.
Yahoo Sports is popular. You also have Sports Book.
Mm-hmm.
So talk to me about those two businesses, what they look like in 2020, what the future opportunities are, what revenue looks like, because that's an exciting area.
Commerce is where sports fits into in terms of completing the life cycle, completing the transaction cycle. So if you think about in sports betting world, the hardest part is to get the consumers, which is the top of the funnel. What Yahoo has today, our ecosystem, as I said, we are a total 900 million base globally, and within the US, sports today is 60 million monthly active user base, right? We are a leading player. And you think about our NPS across our product, our fantasy sports. So we already have a tied-in consumer base who want to do this, right? So for us, it was a natural extension to close the loop in terms of sports betting. So we were clear that we want to do it. We chose the best partner who can be our underlying platform, that's MGM, and that launched in New Jersey. That's our first legalized betting state. We expect that to grow. And
what comes next?
Look, there are at least 5 states. I mean, there are many states that are legalized, but then the policies are not set yet and the product platforms are not set yet. So our hope is in this year, at least we have 5+ more states.
That was Verizon Media CEO Guru Gowrappan speaking with Bloomberg's Ed Ludlow. Without a doubt, many media and mobile vendors say 2020 is the year of 5G. Among those is MediaLink founder, chairman, and CEO Michael Casson, who joined me Wednesday.
As we said last year, and I think it's going to come to fruition sooner than we think, the combination of 5G and just about everything that it impacts will have a major consequence, and usually that's going to be positive from everything I know. The one area that I was so interested in 5G having impact on is content consumption. And I was listening to the news the other day here from CES talking about that other story that continues to be important, which is autonomous driving. And we do believe that autonomous driving and 5G will be part of continuing to fuel the pump in content. Because if you think about people who are now commuting, and all of a sudden they won't be literally behind the wheel, but they'll have that same amount of time to get from home to work, there can be a lot more time for content consumption. So 5G and autonomous driving are one of the interesting combinations that I think you'll see happen in the short run.
Michael, it's interesting to talk about that content and the consumption. We've had a lot of new entrants into the streaming wars in 2019 and continue to see so in 2020 with Quibi, Disney, Apple. What have those conversations been like as you see more and more competition in that streaming space?
Well, I think from our perspective, we look at it through two lenses. Number one, if you're marketing those services, if you're Disney or HBO or Quibi or Peacock or Amazon and Apple, etc., you have to be thinking more like a precision and a performance marketer than a brand marketer, because you're now in the business of acquiring subscribers and certainly hoping that the subscribers don't churn. So from a marketing perspective, it's a different marketing muscle. From a consumer perspective, it's going to be some binary choices. We've talked about the skinny bundle from a cable context. I think we're seeing a rebundling that will occur with the streaming services, because consumers, according to the research, seem to be in the range of between 4 and 5 services that the average consumer will be subscribing to. That's going to create some binary choices.
That was Michael Kasson, founder, chairman, and CEO of MediaLink. And coming up, if 2019 was the year of tech CEO departures, what will 2020 hold? We'll talk diversity in the Silicon Valley boardroom. That's next. This is Bloomberg. If 2019 was known as the year of tech CEO shakeups, what will 2020 hold? Some of those who left the helm included Alphabet's Larry Page, eBay's Devin Wenig, Expedia's Mark Okerstrom, and then, of course, there was Adam Neumann, who abandoned ship when WeWork's IPO collapsed. But like with everything, with these departures can come opportunities. So will we see more women? Diverse backgrounds? Abby Adlerman, CEO of Boardspan, joined me Monday.
There was an awful lot, Taylor. In fact, it surprised me when I looked up the statistics. There were 1,500 CEOs that turned over in 2019, which, by the way, was a record year. And I think that comes from a few different things. One of them is we're looking at 2020 as the year of accountability, and certainly that is what we saw for CEOs in 2019. And if you think about it, the bottom line, what are CEOs really expected to deliver? There's two things, right? One of them is they need to make their investors money. And the other one is they sort of can't screw up while they're doing that. And if you look at all of that turnover, it often came because either CEOs weren't making the money that investors were expecting, or they were making some pretty awful mistakes along the way.
And in all of your years of looking at this, did 2019 feel cyclical, or is there a structural shift undergoing where people are saying, you know what, we're going to finally hold you accountable?
Yeah, I think it's much more the latter, and I do think I think that ship has sailed. So I think the accountability comes from a few different areas. The Business Roundtable, as you recall, came out with a really big statement in the middle of the year. We're certainly seeing it in how investors are behaving, and what we used to call activists versus pacifists have really blended together. We're seeing a lot more demands out of investors as well.
What should we see then when we look to 2020? You talk about corporate governance, accountability. What are some of the main themes that you are really keeping your eye on for this year?
Yeah, so for 2020, the watchword for boards is going to be accountability. And we're even seeing hints of that already. So, for example, what's going on with Boeing's board. And then, of course, the massive reworking of the Bed Bath & Beyond board earlier this year. I think investors, and I think, frankly, regulators, employees, nobody's off the hook anymore.
Do you, when you take a look at after this CEO stepped down and there is a big shakeup, what do you see about then the incoming executives? Is there enough of a diverse group of which to choose?
Yeah, so the thing to remember about CEO turnover is that there's really two ways to address that, right? And it all goes in the grand category of things called succession planning. If a board has had the opportunity or been thoughtful to plan this out, and it's usually a multi-year process, you're going to get a smooth transition, even in the face of tragedy. So Oracle really is a great case study. And with the really untimely loss of Mark Hurd, nonetheless, they were as stable as it could be, right? With Safra Catz prepped and ready to go as the sole CEO. Even in the case of Alphabet that you mentioned earlier, and you had an earlier guest talking to you about Alphabet, I don't think that was a big surprise. Sundar was in the wings and waiting to step into the role of Alphabet's CEO. And then Adam Neumann, your other example, took everybody by surprise. His whole board, SoftBank, and certainly Adam himself.
You know, Abby, I want to come and take a look at a chart here that we're showing inside the terminal. I can't put it out on social because we don't actually have a terminal number for it, but we've created this customized index, if you will, this watch list showing the number of women on the boards. The most is Oracle at 4. You go down the list, 3, 2. It seems good, not great. Have we done enough?
No, there's clearly more work to do, and I think what we're showing here are some of the larger companies. So on the smaller company side, you do have some examples. I'm surprised, I'm not looking at the chart right now, but I'm surprised HP didn't show up there because I like to use them as a pretty good example. But certainly also Elf Beauty, which is just across the bay in Oakland. We've got Stitch Fix, SurveyMonkey. They all have good examples of diversity on their boards.
And you all talk about and mention those are California-based companies. And my smart producer was pointing out that in California there is a new law where if you're a publicly traded company, you need at least one female now on the board. I think the question is if we needed a law, it probably shows that maybe we weren't doing enough. What did you make of that?
Right, so this is SB 826, which is the California law that you're referring to. And you know, I'm a capitalist at heart, so in the perfect world, we would have gotten to diverse boards for all the right reasons, but we didn't, and that's where the law had to come in. And sure enough, it's had very much of the desired effect. Now, there are still 40 companies approximately that have yet to comply, and we'll see what happens with them. That's up to the regulators. But no question, we cut the number of boards that don't have any women at all in California by 2/3. It was close to 120 when this law was put into effect a little over a year ago. So they've definitely made some progress.
That was Boardspan CEO Abby Adlerman. And that does it for this edition of the Best of Bloomberg Technology. We bring you all the latest in tech throughout the week. Tune in each day, 5 p.m. New York, 2 p.m. in San Francisco. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.